and welcome to NDTV Profit. I am Mahima Vachrajani. Well, IT earnings are on its peak and Mastek has come out with its result. And to discuss more about how the quarter has gone by and what are the trends in the IT space, we have with us Mr. Arun Agarwal, CFO of Mastek, who joins us now. Welcome to the show, sir, Mr. Agarwal.
Hey, hi, Manisha.
Right. My first question to you would be that, give us some color on how the quarter has gone by and what are the kind of trends that you're observing in the IT space.
Sure. As this quarter also coincides with the year end, so if you see our full year performance, we have grown 19.2% year on year. And if you see the operating EBITDA is 16.7%, we have delivered on year basis is more than 11% growth. So while definitely quarter four was lower than our expectation, a little disappointment out there, but how the business is building up is quite encouraging. We have secured order book, which is highest ever in the history of Mastek in the quarter, right? It's not only US highest order, it's also for the group the highest order, which has delivered the closing backlog of to $60 million, which is quite healthy as we enter FY25. So we feel very comfortable that, with this healthy order, 12 months backlog, we should be able to deliver the industry-leading growth. And that's where our confidence is emerging. Definitely, quarter four was a little bit disappointment because we wanted to secure much more revenue, but there were a couple of challenges which we got into. But as we see the markets, still there are delays which we are observing in the deal closes. As any other IT companies, I'm sure there's a common pattern which is emerging. But kind of strategic investments we have made in last 2 years, specifically in the US market, UK public sector, and couple of the market in the Middle East as well, like Saudi and the Australian market. We are seeing good growth momentum coming up there, which is getting reflected in our order backlog. And as a combination, we feel very, very confident that, our FY25 will be much better than FY24.
So, Mr. Agarwal, since you mentioned, there are some kind of delays in the deal wins that you have, I just want to understand that are you also facing some kind of uncertainties when it comes to cancelling the deal wins that you have, and will there be any kind of impact on revenue then?
We have not seen cancellation of the deal wins, but we have seen the late start in a couple of cases where the customer, rather than starting on day one, has moved it by a month or so. But again, it's a combination. The kind of digital transformation work which we do, again, it's not a legacy work, right? So it's very, very important for the customer to kickstart as early as possible. But there could be certain preparation challenges from the customer side as well. And sometimes even we get into challenge of getting the headcount right up there, right? Because you need to have the right talent to start the work. Those kind of combination we have seen, but not cancellation as such in our side of business.
And Mr. Agarwal, in terms of your margin, like last when I saw in Q1 FY23, your margins were around 90%. Since then, they've been between a range of 16 to 17%. So I want to understand what kind of margin outlook are you looking at for FY25 and what will be the margin levers then?
So there are a couple of things. Yes, our margins have gone down last 2 years, but these are done with two things in the mind. One, we have been consistently investing into our growth, which is getting reflected into the number and the order book, right? So there's a SG&A investment. We are investing heavily in the US as a market because that's our growth vector. We want US to grow better than the company average. So that also has led to, certain investment from the company side. Second, as we do digital and cloud, more than 90% business is digital and cloud, right? The talent is quite in high demand always, while there are IT industries seeing different pattern. But the particular set of business we work with, the talent cost is still going up, which has led to some margin depletion. But we believe 17% to 18% is a good range for us to operate with. And this quarter was lower to 16%, but that was more, as I mentioned, we were expecting to deliver more revenue. And so cost was already included into our P&L. But as we go by next year, we'll go closer to 17 and 17% plus.
Understood. And in terms of attrition, your attrition has remained within a range of 20% approximately, whereas, the industry average is approximately 15%. So I just want to understand that for FY25 also you'll be witnessing same kind of trend, or are you taking some steps to, bring that number down?
There are multiple steps in place, Mahima, because as I said, cloud and digital talent, they are always in high demand. We are also targeting 18% kind of a range. I know that 20% is little higher because certain part of business we have seen, good amount of attrition. But as we get into quarter one, we are seeing those are stabilizing. Some churn was supposed to happen has happened. But as we get into FY25, I think is more 18% kind of a range, which we are seeing rather than 20%. But 15 is little difficult for our side of business as because of the nature, which we with digital and
Understood. Understood. So 18% is what you're aiming at for FY25. Understood. I take your point. Now, in terms of fixed price versus your time and material price, I'm seeing that the share of fixed price is going up as compared to FY23. So I just want to understand that going forward in FY25-26, what will be the mix like? Because this could impact your margins.
Good point. Again, there are 2 points I want to mention in this particular area. Our fixed price will continue to grow because we want to do much more, managed deal for the customer rather than T&M engagements. But also we need to understand a lot of time that T&M is the billing methodology, and we have to report as per the billing methodology, right? For example, UK public sector, most of the contracts are T&M, but all these are backed by SLAs and the outcome orientation, right? So the billing method is T&M, but the customer is expecting the outcome. They are not controlling any of the hiring. It's all the hiring is decided by the Mastek. There's no customer interview out there, right? So if you see by that combination, we are controlling the resources, we are controlling the outcome. And hence, though T&M, you can say strategically you can't control the margin, but we can control the margin out there. And that's the reason Mastek has been able to deliver quite healthy EBITDA margin as a profile.
Understood. And Mr. Agarwal, in terms of your order backlog, which is around 2100 crores right now, I just want to understand in terms of timelines, how do the timelines look like, one thing, and when will the realization start flowing? Because I also want to understand that how much of this is short-term deals and long-term deals.
So when we report 12 months order backlog, so all these numbers will be executed in next 12 months in FY25, right? Obviously, quarter-wise phasing will be different, but what we don't report into this number is high degree renewals because still we have not signed, right? Those renewal will happen in quarter 1, 2, 3, and 4. As it gets converted, we keep reporting under backlog. But what you see as a reported number is a signed, sealed order which we have to execute in next 12 months.
Understood. And I'm also seeing that, your government and education share in your mix is going up. Now, I really want to understand that, whether this is margin accretive or not.
It is because our government business predominantly is in UK market and also some portion in the US. US, we are not in federal, but certain, city council, municipalities equivalent in the US markets are our customer, but predominantly in the public sector, in line with company average, because what customers are looking for is very high quality outcome, and they believe the price is something which has to be paid in the right way so that they can command the outcome, which Mastek is about.
Understood. Well, Mr. Agarwal, thank you so much for taking our time and speaking with us at NDTV Profit. Always a pleasure speaking with you.
Thank you very much.